Everybody, this is Osprey from MyChartCoach.com. And in this video, we're going to take a look at the indices and then some of the inverse ETFs, and then we're going to take a look at Bitcoin. Okay, so first up, as you can see here, futures are mixed. They're trying, the markets are trying to set up a bounce for tomorrow. You can see the Dow Jones Industrial Average is now down 58 points. It was green for a little while. You have the S&P 500 down. It was down much further earlier. As you can see here, it's bouncing back, and so this is looking like 4 days down, but trying to set up a bounce. Okay, so I'll show you why the markets are trying to find some support here at this level. You can see VIX just turned red. If you look here at the S&P 500 large cap index, ticker symbol SPX. So you can see here after confirming the bearish reversal pattern yesterday. So it had formed bearish engulfing reversal pattern on Tuesday, and then on Wednesday that pattern was confirmed, and there was a close below the 50-day simple moving average. And then today that middle Bollinger Band broke at 27.03, and so that was the big level to hold. That's also the 20-day simple moving average. And stocks in an uptrend form candles above that level. Stocks in a downtrend or indices in a downtrend, which is the whole all this stocks in the S&P 500. They are now in a downtrend again. They're in the downtrend that started back here when the candles closed below that middle Bollinger Band. You can see they dropped down and bounced off the 200-day simple moving average, and then worked their way back up to that middle Bollinger Band that they had broken above temporarily, but now they're back below. So now they're back in this previous downtrending channel, and so right now the S&P 500 is trying to bounce off of this gold line here. This is the 100-day simple moving average at 2665. This is a huge level to hold. As you can see, there's a lower wick on today's candle. So there were bounce players in there loading. There's some end-of-day loading. There's people trying to push it up in after-hours trading. And so, yeah, people are playing this 100-day simple moving average. But keep in mind, if it breaks, that's going to be a major red flag. The last time that it broke, back over here when it dropped, the 200-day simple moving average was hit, and that would bring it all the way down to 2560. So as you can see, also this purple line, this is the lower Bollinger Band. So this is the bottom of the downtrending channel. When stocks or indices or S&P 500 is in a downtrend, it's forming candles below this middle Bollinger Band, and then it's riding the bottom of the channel is the lower Bollinger Band, the solid purple line, and so this is the bottom of the channel way down here. So if the middle Bollinger Band turns into resistance and it's still in this downtrend, then it could retrace back down to the bottom of the channel, which would put it back down, retesting that 200-day simple moving average in the lower Bollinger Band. And now you're going to know whether or not that's going to happen by two things: whether or not the 100-day simple moving average holds. If it holds, then that would be bullish. And then the second thing that has to happen is it has to get back above the middle Bollinger Band. If those two things happen, if it breaks that 2700 resistance level and holds that 2666 support level, then it could get a bounce. So you have to keep an eye out for that. Tomorrow is Friday, so with all the bad news, in the chat, I went through and just a little while ago posted just off of my phone news feed the headlines from tonight, and it was, there's so much negative news out there. I couldn't believe it, from all the way around the planet right now, and so I feel like this is going to be difficult to bounce back from, and everybody gets super bullish with the steel and aluminum tariff that spooked the markets. You had the Fed speaking, there's just multiple headlines, everybody's seeing them, and so yeah, we're going to know tomorrow. It's all about holding the support line. So now let's look at the SPY. This is the Spider S&P 500 ETF, and so this confirmed the bearish reversal pattern yesterday. It has the same setup as SPX, and so it broke below that 50-day simple moving average yesterday, and then today it broke below the middle Bollinger Band at 270. That was the big level to hold, and so today it did bounce off of that 100-day simple moving average, this gold line support zone, and so that's the key level to hold at 265.52. So if you see it stay above that level, 265.52, and then get above 270, that's going to be a signal, okay, the bounce play is happening, and then it would have to get back above that 50-day simple moving moving average at 273. You know, those are the two big levels, 270, 273. If they remain resistance, that's going to signal downside risk. It's back in this channel. Now, if it drops below 265.50, that's going to be a red flag, and then you could see it retrace down to that lower Bollinger Band at 259, and then possibly test that 200-day simple moving average zone like it did back here on that lower wick. You know, that's the thing, is they could come down and retest the prior low. You know, that's the you know, the downside risk as you go down, and we're going to try to see if we can get a double bottom down here and bounce off of that and then head higher. Okay, if you look here at the SPY 15-minute chart, you can see here it started here on the 27th with the break here below the middle Bollinger Band. Notice before it was cruising above the dotted purple line, and then this candle right here changed everything. The whole game, you know, the whole game changed on that break below, and then that signaled this whole downtrend. A whole new pattern started. And so notice how, you know, this is the top of the channel, you know, up here, and then you've got the bottom of the channel, you know, down here. And so it came up and it got about midway, and then it dropped back down. And so, yeah, you're looking at also, you know, you've got this downward action here happening. And so it's going to have to break this descending resistance. So you have a channel within a channel. You know, it has this. So it has this bigger pattern here, and then it ended up having that big nosedive end of day. And so if it can break above this 268 level, this 268.25, that's going to be your clue tomorrow that it's heating up. And then if you see it above 269, that's where you'll be like, okay, the SPY is really bouncing. Okay, and then it would have to, you know, then it could possibly get a run up to 271. But if it hits resistance up there, that could be the top of the bounce, because it has to get back above the top of this channel. You know, right now it's at the bottom of the channel. So it did have the volume spike. You can see the bounce players were loading. If you look here at the SPY 15-minute chart, this is taking a longer look, and I'm showing you the different channels here. Over here on the 12th through the 16th, it had this nice strong upward channel, and then notice how that turned into a downward channel between the 16th and the 23rd here. And then it broke out on the 26th, and then it dropped for the last 3 days, and so it has another downtrending channel. And now notice that it's back inside of this previous channel, this channel right here. It's back inside of it. So the bottom of that channel would put it down here at 264.50, and that lines it up with the support over here on the left, over here from the 13th and the 12th. And so that's what it's hitting right now. Okay, so it hit some levels here from the 14th and the 13th and 12th, this support zone. It's trying to bounce off of it. You know, if it breaks below, it could come down here and test the bottom of this channel. You know, you're looking at 262, 264, 265. Those are big levels below. Well, what it needs to do is break above EMA 13. That has been the big level. Notice how, you know, it hit the orange line here, and then it hit the orange line again. So if you see it above EMA 13 at 268.22, you know, that's going to be your signal that it's ready to head higher. So right now it's in this you know, bearish downtrend, and so it needs to break resistance to be able to get a new uptrend going. So one way to play the S&P 500 when it's dropping is SPXS. This is the S&P 500 bear 3 times, and so as you can see here, it had formed a bullish reversal pattern. Okay, so it had bullish engulfing on Tuesday, and then Wednesday, yesterday, that pattern was confirmed, and so it had closed above EMA's 4, 8, and 13, and notice there was no upper wick on the last 2 candles there. You know, it closed extreme bullishness. The last trade of the day was high of day was the last trade of the day. That signals the bulls were very strong into the close. And then today there was another follow through, and so it did break above the 2 key levels, that green line, the 50-day simple moving average, and above the dotted purple line, that's the middle Bollinger Band at 28.38. And so if you see SPXS stay above 28.38, that's going to be a signal that this uptrend is intact. It's back in this uptrend mode from what started on the break above this middle Bollinger Band. You know, it broke below temporarily, and now it's getting back above. You can see how it was holding this level. It dropped below. Now it's back above. It needs to hold this middle Bollinger Band, and then it could keep this trend going again. And then if it drops below, then that'll signal you know, downside risk for SPXS. If it holds, then the target is up here at the 100-day simple moving average at 30.50. That'll be the big level to break. You can see here it tried multiple times and failed. Once that level turns into support, that's when it could really break. break out higher. So this is a crucial level in the chart for SPXS. It has to hold that middle Bollinger Band to keep this uptrend going. Now take a look at the 15-minute chart for SPXS. You can see here it had a really nice run. You know, it heated up right here on this candle at 145 on the 27th when it broke above this green line. I put out alerts on this candle in our chat recommending everyone that this was in play, and the reason why is because it got above the middle Bollinger Band at first, and this was on the radar, and what I was looking for was a close above this green line to signal, okay, it's ready to go. And so this to me was the good low entry point, and as you can see, you know, it's paid off nicely. It's just been cruising higher ever since. So it pays to be in the chat. You have to be in the premium chat, and so that's where it's at. And so please come and check that out. Send me a direct message and I'll get you in there. If you look here, you know, it's just going, it's cruising higher, higher, higher. So what it needs to do is break above this 2940 level. Okay, that was the high of day today. You know, it's still holding the middle Bollinger Band at 2846. So if it stays above that 2850 level, you know, that signals that it's intact, the uptrend. Now, if it drops below that 2850, that's when you could see it take a breather, and it could drop down to 2750 and test that 50 and 300 simple moving average support levels. So look at the huge volume here. You know, just giant volume poured in today, and so just really interesting. You know, there's huge volume and a big push. You could see here the green line, you know, crossed above the gold line, and then it crossed above the red line. That's the golden cross, and then now above the 300 simple moving average. So this is just a sign that the chart is building strength, and so we'll just have to see if it can continue. And now if you look at the SPXS monthly chart, I thought this was interesting. You could see here, look how it's been pegged below 30 on RSI. And so if you see the monthly chart get above 30, that's going to be your big clue that it's really heating up. And then also keep an eye on SDOW getting above 20. That would be another signal. It hasn't been above those levels in years. And so look at this for you know, multiple years. This has been in a very strong downtrend. You know, the charts, the markets have been very strong. And so look at the big volume spike in February. You know, check out this candle. You know, it temporarily got above EMAs 4 and 8 and then pulled back. What you're looking for if you're a bull on this is a close above EMA 4 at 28.92. If it can close above that level and turn it into support, it could really get moving, and this could turn into you know, if the markets do take a breather and pull back for a little bit, this could turn into a longer term swing trade if you get your contracts further out. And so if you see here, it's got the longer, look at the huge volume. I mean, that volume is insane. You know, 100 and, you know, over 140 million shares traded. So yeah, this is huge. So keep an eye on it. We're going to see if it can get a reversal going. Now look at INDU, or if it's, you know, we're going to just keep track of it. This could just be like you know, temporarily hiccup, you know, and it could fail to get above EMA 4 and it just continues lower. You know, it's a risk to hold, you know, when it's below EMA 4 for a long-term play. Okay, so you look at INDU, Dow Jones Industrial Average, and of course, I mean, the market, you know, it's just a very odd time in the markets right now, so it's hard to anticipate exactly where we're going to head from here in the short term. This is all for short-term trading, and so we're yeah. So right now, the markets are looking like they're under pressure. If you look at the Dow Jones Industrial Average, it was down 420 points today, and it was down much earlier. You know, it had a nice bounce off of that 100-day simple moving average, just like the S&P 500. You can see it bounced off of 24,429, that gold line. You could see it held here and then got back above that middle Bollinger Band, above the 50-day simple moving average. And so the bearish reversal pattern was confirmed yesterday, and then, you know, that close below that 50-day simple moving average and just below the middle Bollinger Band, it did signal more downside risk. And so now you know, it could get a technical bounce off of this 100-day simple moving average. If it pulls below, you know, closes below, and that 100-day simple moving average turns into resistance, that's going to signal downside risk. You know, you have the 200-day simple moving average. This is way down there, but more than likely, you know, if that 100-day simple moving average breaks, you're likely to see a drop down here to test the recent low close and this you know, 23,800 level. That would likely be tested. Okay, so if you look at the INDU 15-minute chart, you can see the similar thing where you know, the break once again below that middle Bollinger Band. Look how it had the nice uptrend above the dots, and then right here it broke below the dots. right? And that signaled downside risk, and then the downtrend started. It keeps failing to get above the dots, you can see, and so it has to get above the purple dots, which is the middle Bollinger Band at 24,755 to get a new uptrend going. As long as the candles are forming below that level, it signals more downside risk. So you can see it has had a downtrend going, and then bam, they really attacked it here, and it's gotten into another downtrending channel. So if it gets above 24,850, it could retrace back up to this other resistance zone that's lined up with the 200 simple moving average at 25,220. So if right now it's failing to get above EMAs 4, 8, and 13, that orange line has been resistance. So if it can get above 24,666, that'll be your signal tomorrow. Above 24,666 would signal, okay, they're trying to bounce this thing, and then it would need to stay above that level. Now, if it stays below that level, and then especially if you see it drop below EMA 4 at 24,605, that's a major red flag. That signals the bears are still in control. Now when the Dow is dropping, one way to play it is SDOW, and yeah, for these bear ETFs, you could either buy the equity or you could trade the options, and so that's what we've been doing, is trading the options. And so yeah, SDOW calls have been delivering nice percentage gains. You can see RSI is above 54. It had the bullish engulfing reversal pattern down here that was confirmed yesterday, and then today it broke above that green line and above the dotted purple line. So as long as it stays above that middle Bollinger Band at 1841, this uptrend, you can see how it's holding the candles here, is intact. And so that's what the bulls are looking for here. They're just looking for this previous uptrend here to continue. You could see how it's worked its way. See how it was hitting these candles, and the close here is back above it. If it can stay back above that level, that's going to be your signal that it's intact. It's ready to stay higher. It's all about that middle Bollinger Band and that 50-day simple moving average. You can keep it really simple. Candles flimmering above 18 right now signals it wants to stay head higher. If it breaks below 18, that's going to signal that the bulls are still strong. So if it does hold that 18 support level and it breaks through 19 here, then what you're looking for is the 100-day simple moving average at 2046. That's the big level to break. You can see it was trying to hit that level on the past run, and so that'll be the next big target. Okay, let's look at Nasdaq Composite Index, ticker symbol COMPQ. You can see here that it's cooling down. RSI is below 50. This was the strongest of the indices. It did close down 92 points today, so it really it took a big hit, and it had been cooling down already, but and I had showed you in the previous of the lower high, and it had a high here, and then it came down and made a lower high, and then now you have the descending resistance. And so it has a lot of work to do now. It's come down to the middle Bollinger Band, and so it failed to make that other high. Now it has to deal with descending resistance, and now it's hitting that middle Bollinger Band, that dotted purple line. You can see how it held multiple times here, and so it's right back where it was the last couple of weeks, where it was trying to turn that level into support. And so you're going to know, is technology going to be bullish? Is it going to break out and retest the highs, or was this the retest? We had a V-shaped bounce, and it came back up, and it failed to even get to the previous high, which shows weakness, and then now it's already pulling back. Are the markets gonna, are people gonna load heavy now with all the red flags that are out there? With rising interest rates, possibly 4 rate hikes, tariffs. We're talking about more tariffs coming down the pipe. The algorithms do not like that word. When they hear that, right now it's a sell signal, and so it's driving the markets lower, all this negative talk, and so I think it's going to be hard pressed for this level to hold. Now they could get a technical bounce, and they could run it, and they could squeeze everybody. You just never know. That's why we can all have our opinions on what we think is going to happen, but you just have to follow the charts. And so I'm just interpreting the charts here. And so if it holds this level, it's right at that level right now, then it could bounce. Now if it stays above 71.62, then it's still in play. Okay, it's a possible bounce, technical bounce. That would be the bottom of the bullish upper Bollinger Band channel. Now, if it drops below and closes below that level, that signals downside risk and to stay short. And that a possible it's back in the previous downtrend, and it could drop down to the 100-day simple moving average at 6957. So that's the downside risk, because it drops all the way down to retest the previous level of support and and fail to keep this new uptrend going. Notice the lower Bollinger Band is way down there at 6828. So this is a crucial level. I mean, the markets are down 3 days in a row. So it wouldn't surprise me if it bounced, because nothing goes straight down. It's just there was a lot of negative news, and there were surprises out, and the market does not like surprises. And so let's look at the Nasdaq 15-minute chart here, and you can see it had the downtrending channel already working for 2 days, and then today it just fell off the cliff. Right? It got hammered super hard, and it broke below. It had already broke below the break below. Once again, everybody, it could be really simple. Below the middle Bollinger Band up here was your signal that it was cooling down. If you were really bullish, and to start like locking in some gains, a lot of charts were double topping, and so it gave you some time before it really started breaking down. And then once this green line broke, if you weren't taking precaution here, when it got below the green line, the 50 simple moving average, it was really a big sign. Red flag, danger. It got up here. And probably sucked a lot of people back in. But once it got back below, it was a signal, okay, this isn't happening. Now it's below the 100 simple moving average, and then it got below the 200, another red flag, and then bam, it broke below the 300 into the close. So now it's below all the moving averages on the 15-minute chart. It doesn't get more bearish. So it is very, it's at a very oversold level here. It looks like it could be pushing for a whole new downtrend if these levels turn into resistance. What needs to happen for the bulls is it has to get back above all these levels, and then get all the way up here above the top of this downtrending channel, when that's lined up with the 100 simple moving average, and turn the 7340 level into support. Once it gets above 7340, then the chart would be looking like it's bullish again. Now it could get a big bounce between this level and that level, and then still stay bearish. So as traders, you're just looking for the opportunity to make a trade, and so we're keeping our eye out for a technical bounce. If you look at TECS, this is the Drixon Daily Technology Bear 3 times, and so this is one way to play technology if it's dropping, and so it had a nice bounce. As I pointed out before, it was the most beat up of these bear ETFs. The technology was so strong, this was super hammered, and so it did form the bearish piercing line reversal pattern, and then you can see the piercing line reversal pattern, and then that pattern was confirmed yesterday, and it closed above EMA 4, and that was your big clue. It confirmed the reversal pattern. It did fill the gap here, but it closed above the top of the gap, and then it closed above the pink line, and that was the first close above the pink line since before since this drop hole started. And so you can see that it closed below EMA 4 right here, and then this is the first close above yesterday since this day right here on the 12th, and so this was a bullish change in trend, and then you had nice follow through today. Now it did close right at that EMA 13 level at 569. If it can break above that level, then you're looking at up here the 2 key levels, the middle Bollinger Band and the 50-day simple moving average, the 6 to 610 level. Once they turn into support, then it could get moving. That's when you get the run up to the 100-day simple moving average, similar to over here. Okay, so we'll see if it can keep cruising. It just depends on whether or not technology is going to heat up again. Okay, so let's look at IWM here. Okay, so and everybody's talking about the tariffs not being so good for different companies, and Apple was one of the companies that was mentioned today. And so if you look at IWM here, it dropped below 50. It cooled down, right? But it formed an interesting candlestick today. So you could see here the bearish reversal pattern was confirmed yesterday. That bearish engulfing. This was getting hit the hardest. You know, it had closed yesterday below the middle Bollinger Band and the 100-day simple moving average, the gold line and the dotted purple line. And then today it formed, you know, pretty much a doji. I mean, this is so close to a doji. I mean, maybe technically it's not, because it's not exactly the close, and the open and the close need to be equal for a doji to form. But this is signaling it's a very similar type of candlestick pattern. Regardless, it's signaling possible bounce when you have multiple red candles in a row, and then you have a gap down open followed by a doji or a hammer forming. That's a setup for a possible bounce. So this, out of the different charts, this has the best bounce setup. Okay, but it isn't bouncing off of a moving average, and so that's what the other charts that I showed you, that's what they have going for them, is they're hitting the moving average. But for the Russell 2000 here, for the small caps, you know, they are trying to bounce this. You can see with that long lower wick, and so it's going to be all about getting back above that 151 level that we talked about the last video. If you see it above 150, 150, that's where you'll be like, okay, this is cruising again. That's that 100-day simple moving average we talked about. Okay, so above 150, 150, it signals, okay, the small caps are bouncing, and it could you know, try to get this upturn going, and then it would have to get above that 50-day simple moving average like it did on these two candles, and turn that level into support, 154. Now if it fails to get above 151, that's going to be your red flag. That 150, 150 level, that's your red flag. Okay, it's not happening, it is in this downtrend, and then you'd be looking for a drop down to that 200-day simple moving average at 145.50, and notice how that's perfectly lined up with that low close. Okay, so yeah, and then IWM did form the bullish deliberation block reversal pattern. That's where you have consecutive low closes in a downtrend, and then that's followed by that short candlestick. And so you know, this is a bearish reversal pattern did form. Okay, so you have the consecutive low closes, and then you have the gap down with the small candlestick. And so that, you know, this is a bullish reversal pattern, bullish deliberation block. It's the inverse of the bearish deliberation block, and so we'll be seeing it. We'll be keeping an eye out to see if this pattern does confirm. You look at the downtrend here. This was in a very tight channel all the way down, and so as you can see, it's kind of in the middle of the channel right now. A break above that 150, once again 151 level. You can see it's lined up here with the top of the channel, and then that green line, the 50 simple moving average. You know, break above these levels here, and then that's going to signal, okay, yeah, this is bouncing, it's heading higher. And then if you can get above 153, you can see the moving averages are lined up. That's where you're like, okay, this is really happening. The bounce is for real. You could get a nice rally between 150 and 153 and make good money, but if it fails to get above, you know, that 154 level, then that's going to be signaling, okay, or that 153 level, that's going to be signaling, okay, this is the top of the bounce. You know, what could happen is a short cover rally. That's what we're keeping an eye out for. Okay, above 150 would be a signal that it's heating up. That's the middle Bollinger Band right now. You know, if the bottom of the channel right now is down here around 148. Okay, and so if we look at TZA, that's a way to play the small caps if they're under pressure. This is the Drixon Daily small cap bear 3 times, and you can see how it's heating up while the Russell 2000 is cooling down. You know, it's in the bull zone. It's at 55. You know, our FASTO is now above 20. That's RSI, and so you have the bullish crossover here. You know, the green line crossing over the black line. I mean, check out the last time that happened was right here. Okay, and that was in January. That was the crossover, the green line over the black line, and so it just crossed over. Look how long this ran. You know, it went. If you look in comparison, that was down here. That was the start of this run. You know, so is this the start of this run? Notice how this crossover lined up with the close above the middle Bollinger Band, right? This just closed above the middle Bollinger Band. So if the green line stays above the black line, that's going to be your signal that this new uptrend is intact. If you see the green line on ADX cross below, the plus DI cross back below the black line, which is ADX, that'll signal, okay, no, it's not happening, it's cooling down. As long as that green line's above the black line right now, that's going to be a nice signal that the bulls are in control. Notice how it closed above that 100-day simple moving average at 1253. If it can hold that level, that's going to be bullish. Now, if it drops back back below that level and below that middle Bollinger Band at 1240, that's going to be your signal, okay, this isn't happening, and you know, the markets are trying to reverse. Okay, so this is a crucial level on the charts for all of these, everything that I just showed you. And if you look here, TZA did form the bearish deliberation block, so it's the opposite of the bullish deliberation block. There's 3 consecutive white candles in a row, and then it had the gap up open. And then notice once again, this is not a doji, but it has a similar type of candle where you have the long upper and lower wicks with the small real candle body. You know, the setup for future reference is when you have multiple white or red candles in a row, and then it's that gap down, or you know, gap down if it's down, or gap up, and then you look for either a doji or a hammer, or a very similar type of candle, that, you know, a candle that's very close to that with the long wick, showing that people are trying to load. It's just a clue that it's possibly setting up for a bounce. And then finally, I want to finish with Bitcoin. Okay, so here we go. Bitcoin is bucking the trend, right? So this is very cool. It broke above that 50-day simple moving average that we discussed in the last video. It had hit that level multiple times. That's the green line. It's always the green line on my charts, just to make it easy for future videos. Every time you watch one of my videos, the moving averages are the same color, and so I use that on all of my charts. And so that way you can, you know, if you're a regular viewer, you can look at my video and quickly see, okay, yeah, this is the 50-day simple moving average, the green line. We closed above yesterday. That signaled that it wanted to head higher. And then today, it's trying to bust through double top resistance. And that was some warnings that I put out. It's 11,224 and 79 cents. That's where I have it at, roughly in that area. I mean, that might not be exact, but that's what I have is this closing price here on the 20th of February. That's the big level to break. If it can break above the closing price on the 20th of February, you could look up exactly what that price is. A close above that level should be the signal, okay, Bitcoin wants to head higher. That's how the algos usually work. If it can close above that level and hold it, you know, that's your clue, that's your signal. Okay, yeah, they're taking it higher. Now, if it hits that level and it fails to close above, the close is the key. You know, it's not, you know, you can see here how it got above the upper wick and then pulled back, and so it's turned this level, you know, this is big resistance. If it can close above, that's going to be our clue. Yeah, it's ready to head higher. And then what we'll be looking for is a run up to this gold line, and that's the 100-day simple moving average, and it's currently at 12,323. So that's the upside potential, is it could run $1,000 here if it could break this level. It could easily run $1,000 handle right here. It could go from 11,220 to 12,320. It could go $1,100. You know, bust through this upper Bollinger Band and run to that 100 through the, you know, that's what the technical analysis is saying. If you bust through a double top level, usually volume will come in and take it higher. People are going to load on that. Notice that there was big volume here on the first. And so check out the big volume spike, and so there was a big volume spike down here on the 6th, and so and we know that there's a big player that's been buying, and so, you know, maybe you know, we're going to see, can they push it higher, you know, or are they locking in gains here? You know, are they going to lock it in and then take it back down? Now the big thing is going to be this green line. As long as the 50-day simple moving average, currently at 10,377 and 90 cents, holds. Okay, if that level holds, this green line here, then that will signal that the uptrend's intact. I think that's an easy, like, stop loss level. You know, if it drops below that, that's going to signal, okay, red flag, danger, because the middle Bollinger Band's right below that, and it has to hold that at 10,086. You know, if it holds the middle Bollinger Band, the 50-day simple moving average, the uptrend's intact, and people should be fine with without having too much risk. If those levels break, that's where you get the correction, and it drops below 10,000, and you see the 9,000s again. But this is a crucial level on the charts, and there's $1,000, $1,100 upside potential if it can break this level. If you'd like to learn more about this and want to come join us in our chat, please come check out the premium chat. Okay, I'll post the link below the video, the YouTube video. Thanks for viewing.